for joining us for Business, Small Business Finances. We've got our great panel up here today that I'll introduce momentarily. Before we get there, I have a couple introductions and a couple of people that have some information to share with you guys. We're going to start, if you don't mind, joining me in introducing Annabelle Gall from Midlothian Economic Development. Oh, you're right. Witkowski. My bad. Witkowski. That's not bad.
It's okay. Yeah. Good morning, everyone. It's great to see everyone here. So this is a very exciting summer for small business, local business in Midlothian. This is all a part of the Midlothian Business Academy, which is a bunch of different educational resources that we have for any business located in Midlothian, any chamber member. And so tonight, let me backtrack. So the most exciting event is happening in September here in Midlothian. It is our business pitch competition, and it is structured a little differently than how most business pitch competitions you see around are. So a lot of business competitions are for startups. Big ideas, they are launching and they need support. And so this is for our existing businesses who have already started operations and they have this idea. They want to expand their services. They want to add, something, more equipment, another machine, something in their business. They just need a little push to do it. So if you had $10,000 for your business, what would you do with it? And whatever you thought of, that's what you need to apply with. So tomorrow you get a check for $10,000. What's the first thing you're doing? And then just formalize it and write it down. And if you're like, oh my gosh, I don't know how to write professionally. I know how to run a business, but writing a business plan, really, that's not my cup of tea. Well, tonight here at 5:30, we are having a workshop on how to write a business plan and what to actually put in it. Because, a 27-page business plan looks great, but that's not actually what, bankers need, what's needed. It's just a bunch of fluff. And so we're having Keaton May. He is he's the director of an angel investor group. So he reads business plans every single day. And so he's going to come share what actually needs to be on your business plan. And then we'll share more about the pitch competition. If you have any questions about it, we'll also be here. So it's tonight, 5:30. It's going to be great. And yeah, if you have any questions about the pitch competition, come ask us. It's for Midlothian businesses though. So if you are expanding or moving to expand here in Midlothian, it's an opportunity you don't want to pass up.
Then I'm going to bring up Amy Freeman from the Navarro Small Business Development Corporation, right? Center. Sorry. Yeah.
So yes, I'm Amy Freeman with the Navarro College Small Business Development Center, and we are a no-cost confidential service to the small business community. We just help people do all kinds of things small business. But as it relates to this, a lot of you just don't have a basic understanding, right, of how business lending works. A lot of you come in with a huge amount of questions. It's totally different than buying a house. It's different than buying a car. The whole process and expectation is different. And so I help a lot of you with those questions throughout the day. I help you be prepared for business lending. And like I said, we're a no-cost confidential service. We just help answer your questions and point you in the right direction. And we have relationships with these wonderful people here, along with other different types of lenders, to help you achieve your small business goals. And so I'm excited to hear what they have to say with some of their questions that we're going to ask them and some of the other things that they have to say.
Amy, could you
Yes.
give us an example of maybe somebody that you've worked with and like how you support them sort of end to end in their planning process?
Sure. So it really depends on the nature of the person's project. Recently, and I can't say who because we're confidential, but it took about a year and, I don't know, from start to finish, almost 2 years. No, almost, I guess maybe 14 months. But a gentleman came in, wanted to start a business, and he had plenty of money, good credit, great experience. We got him a $2.5 million loan, huge project. Opened his doors in March. That's totally not normal, right? So when I say that, that's the best case scenario. Good credit, plenty of money down, right? And good experience in the industry. They just take time. But even a big project like that takes a lot of time. So when y'all come into my office and you need money right now, it's not usually going to work that way. Now, smaller projects, I have no idea what I'm doing. My credit's not so great. We do have options, but it really depends on that credit score. And you do have to have some money. They want some skin in the game. So we help you with the business plan writing. We help you with the cash projections. That's a document that is required for small business loans typically. They want to know how much money you really need, exactly how much money you need, where the numbers come from. So we kind of help with all that kind of stuff, prepare you for the process, walk you through the process. We connect you with the lender. If a lender here sends you our way, we do our best to send you back to that lender because we appreciate the relationship. But those lenders can't always help you. And that's also kind of a misunderstanding, is that some of these lenders that you see out in the community, they don't really help with all types of small business lending. They're limited. And so, but we know we have relationships with those other lenders, and we can fit you with the right lender and the right opportunity. And it all just kind of depends, but we've helped with most of my projects are much smaller. You need $100,000. You want to do a startup, you need $125,000, right? You need to buy a piece of equipment. You need to buy more inventory, all types of things like that. We help you really prepare for the process. Sometimes it can take a little bit of time, which is really kind of overwhelming for people. I'll say this, though. Right now, there's a lot of predator loans out there. Like if you go to Square and you get one of those little $20,000 Square loans, QuickBooks gives you loans, right? It's easy money. You're trying to make payroll. You're just trying to make payroll on Friday. I need $20,000, right? It's pretty easy to obtain. And it's kind of scary, though, because what I see is y'all come in my office and you've done this 3 times, and now you've got $60,000 in what I would call predator loans. And now you're just overwhelmed. You can't figure out what to do, right? Because the payments are overwhelming. I've seen some really overwhelming payments from some of these predator loans, and it's killing your business. And I can't help with that necessarily. I have one lender who says they will help get you out of that situation. Haven't seen it happen yet. So I would rather you come to one of them or me and let them help you out of a bad situation, hopefully before you get there. But once you've gotten into those predator loans, the SBA will not refinance those. That's my understanding. And so it's killing people right now because it's just easy money. So, and if anything we can do to help, that's my job. But that's kind of an example of some stuff, not always positive, but I would rather us have an honest conversation before you get there. Did that help?
Awesome. Thank you, Amy.
Sure.
So before I introduce our incredible panel and get started with our panel questions for today, the way this format will work is that we'll spend most of the time with our panel questions, but we will open it up to the audience for questions with about 10 minutes remaining in the program. But I want to give everybody a chance to introduce themselves. So we're going to go left to right, starting at the back and moving forward. So we'll start back there in the left, I think.
Good morning. I'm Victoria Roberts. I'm the president of the Midlothian Chamber of Commerce. Thank you all for being here today.
I'm Chloe Roberts. I'm the events coordinator for the chamber. Mason State Farm, and I'm also a chamber ambassador.
Yeah, we can tell who the morning people are for sure. I'm Ryan Mason with Ryan Mason State Farm.
I'm Jennifer Anderson. I'm a sales director with Mary Kay Global.
Hi, Teresa Lightfoot. I'm with Grazers Galore. I'm the Midlothian concessionaire.
Wait, just keep going this way. Yeah.
Corey Beck with Impact City FC. I'm the program coordinator for our program.
My name is Mike Herrera. I'm an intern at the Chamber of Commerce.
I'm Annabelle.
Tyler Gibson with BlazeX Sprinkler.
Kyle Kennedy with Midlothian Economic Development.
Good morning, everyone. I'm Candy Slade, the Business Account Liaison for Workforce Solutions.
Hi, y'all. I'm Jamie McGinty with Running Blue Ranch.
Sharon Berrigan, believing restoration is attainable.
Scooter Holland with 5 Star Printing. I'm Patrick Johnson with VIP Roofing and Contracting, and I'm also an ambassador for the chamber.
Joshua Carpenter with AC Driving School.
Daniel Francis.
Another Joshua Minson with Ryan Mason State Farm. I'm an intern.
I'm Caleb Mason. I'm an intern with Ryan Mason State Farm.
How's it going, y'all? I'm Preston Anderson, and I'm also an intern with Ryan Mason State Farm.
I'm Isaac. I'm also an intern with Ryan Mason State Farm.
Yeah.
Daniel Francis, financial advisor with Edward Jones.
All right, thank you all for being here today. Now I want to introduce our esteemed panel. Down here on the end, we have Nick Hester from First Financial Bank. He's a Senior Vice President, Commercial Lender. Next to him, we have Natalie Yantz, Branch Manager for InterBank, dealing mainly with deposit operations. And then we have Midlothian Chamber Board Member and a member of the Education Committee from Pinnacle Bank, Jalen Corin. He is also a commercial lender. So we've got some experts in the field here to answer our questions today. I'm going to jump right into it. We're going to move left to right with the mic, and then when we get to the end, they'll move back right to left. So we're going to start the first question with Jalen and move down to Natalie and Nick. Let's start with what are the biggest financial mistakes you see small business owners make, especially in their first few years?
So I think with this one, Amy really touched on this as well as I could hope to. And it's just primarily misunderstanding where funds can and should come from. There are a lot of predatory loans, especially, it seems like in the last probably 2 to 3 years that have really started to become more readily available. And it sounds great, but it's kind of like anything, you're paying for it one way or the other, whether it's from higher, barriers to entry with some of our, lending that's available to you, or, just kind of the structure of the financing that's being provided to you. So that's the main thing that I could think of, and then it's just kind of the understanding that, Amy mentioned it and kind of alluded to it a little bit, is there's some deals that are what we like to call bank deals and some that aren't. You've got F&F, friends and family, type projects that you guys can do that, are great, and we love you and we hope that they work out. It's just there's not enough there for us to do anything with it. And so that's where you get into either Amy's investment network or your own investment network, which is going door to door or whatever you kind of need to do. But there's just some things that unfortunately we would love to be a part of. It's just not my money at the end of the day. And so that's really kind of the biggest misunderstanding that I see typically when I talk to small business owners.
I would like to, that's essentially what I would go with as well, just not knowing where your funds are going, not keeping up with it, somebody else taking care of it, and not seeing the everyday situation. You look at it once, every 6 months. Well, what happened in those past 6 months? Were there any shortfalls anywhere? Then you're making it up the next month. Just knowing where your financials are and keeping track of them, not just trusting somebody, oh, they've got it. Know actually what's going on and knowing what those financial statements mean, what information's on there, and knowing how to utilize them down the road.
Hi, everyone. I would probably have to say the biggest mistake people make is starting a business with too little capital to carry them through the first couple of years. There's a lot of people have great ideas. They know they can do this job or start this business, but they don't look at what their expenses are every month, you know, how much they're going to need to carry themselves that first couple of years until the business really gets off the ground and starts making money. And then they get into it 6 months, a year down the road, and they're out of money. They don't have the profit and loss statement and the balance sheet to come in and borrow money, and they end up having to close the doors. So if you're, and Amy will attest to this, you got to have some money in it to get things started. You can have the best idea ever, but you know, if you don't plan for the future, you're gonna run into that. You're just gonna run out of cash.
Nick, what's a good rule of thumb? So like depending on what the loan is that 5%? Is that 20%? Like what should people be expecting?
As far as borrowing money going in, I would probably say 20% minimum on a startup. You've got to, you know, if you've got a spouse that makes really good money and can pay the bills, that's great. You know, but if you don't have a spouse, if it's just you and you've got rent and car payments and credit card payments and you gotta eat, I'd say you probably need quite a bit more than that to get things going.
We're going to stay down there with Nick. When a business owner applies for a loan, what are lenders really looking for beyond just a credit score?
I just got back from a meeting where all the examiners, the Fed was there, the state was there, all the examiners that come in and examine banks. And the number one thing that they harped on over and over, it came out in the first 5 minutes, and I bet you they said it 20 times, is cash flow. You know, if you don't have an accurate profit and loss that shows you're making money, how do we loan you money if you don't have the ability to pay it back? So, yeah, cash flows, it's big.
Yeah.
It's big, and you need to have a good accounting software and keep good track of your cash flow. But yeah, that's the big one. Profit and loss balance sheet. If you're working off of projections, solid projections that Amy has looked at and said, yeah, these are attainable, you know. But yeah, that's what I'd say there.
I would absolutely have to agree. I mean, that's exactly what I have on my notes here. Net worth, cash flow, just making sure that you have the ability to pay the loans back. And going back to knowing what's on the balance sheets and how that can help you.
Yeah, so there's really any number of C's, depending on what kind of a lender you talk to and how long they've been in the game. You got 3 C's, 5 C's, 7 C's, 9 C's, but really the biggest ones are going to be cash flow, like Nick had mentioned, collateral, and cash on hand. You know, if you don't have any skin in the game, kind of like, you know, like has been mentioned, there's almost nothing I can do for you. If we can't secure the loan, you know, such that I don't really have a whole lot of risk in doing the project, then, you know, it's just really difficult for it to get off the ground. And that's nothing to do with you. It's nothing to do with the project. It's just a matter of, you know, if things go sideways, I've got to have enough collateral, not only to make the loan whole, but also to carry it, you know, during the time that it takes to liquidate that collateral. And so if I could do it with less, trust me, I would. I think, you know, Nick would attest to that. It's something that we kind of try to toe the line on is, you know, how much and how do we value that and those kinds of things. But really, you know, and it's kind of interesting, before I started doing this, credit score was always something that I thought would be a much bigger deal in business lending than it is. And at least for me specifically, and I guess, Nick, I'd be curious to hear how you guys handle it. Unless your credit is really bad, it almost doesn't matter. You know, a 700 score versus an 800 score doesn't do a whole lot for me at Pinnacle. Nick, I don't know if you guys really look at that very differently.
No, you're right.
Yeah.
Really 680 above.
Yeah, exactly. I mean,
fall into the same category.
Yeah. Once you get, you know, 640 and lower-ish is where it starts to be, okay, you know, why? And if there's an explanation, then there's an explanation. But that's, you know, really where it kind of kind of starts to be a question.
How can a small business owner determine whether they should use a loan, a line of credit, or simply save and pay cash for an investment?
Yeah, so this is kind of a bigger question than you would initially think. So first, what is a line of credit, right? So a line of credit is really the simplest way you can think about it is it's a huge credit card, essentially. You know, it's really something that we want to see kind of drawn up, drawn down, really paid off ideally within 30 days or so. But this is for things like short-term capital, right? Like, you know, hey, we need to make payroll and I don't want to borrow money from QuickBooks at 35% or whatever it is. Well, we can set you up with a line of credit, and depending on how it's collateralized and all these different things, you get that rate at 8%, 9%, something like that, maybe even lower. Or, hey, we want to have funds available. I'm a real estate investor. I need to have immediate cash that I can make, cash offers on these properties and then find long-term financing. You buy the property, borrow money on the line, get the long-term financing, pay the line down, and this is, it just kind of cycles. Really, whether it's a loan, line of credit, or cash on these things, just depends on the life, cycle of what we're buying, right? So, line of credit, if we're doing payroll, if we're doing a small piece of equipment, 30 days really is kind of my personal rule of thumb on that. A loan is going to be anything longer than that. And then basically everything else falls into cash. Anything you can do in cash, really is best, but obviously you got to have some operating cash. It's funny, bankers will all tell you, buy this in cash, but also have a bunch of cash. And it's like, okay, Mr. Banker, where do I find all this cash? And so we empathize with that, but it really is just kind of the world that we live in is just, it's a cash centric world. The more you have, the better, obviously.
Like he said, just the long term versus short term, like what are you needing the loan for? It just could depend on that itself. I don't really deal with loans a whole lot, so I've had a few little notes, but that would be talking to your loan officer or your CPA and getting the information on your cash flow and everything would definitely help with that situation. But just determining, is this for a short term or a long term would definitely help you answer, do I need the line of credit or something more long term?
I guess my answer would be just come in and visit with your banker, and let's all look at it together and decide, is this something that you need to go pay cash for? Is this gonna, like Jalen said, is it gonna dwindle your cash down to a position to where you're uncomfortable? Then you probably need to borrow some money. But if you've got $300,000 sitting there and it's a $100,000 purchase and you only need $150,000 to carry your month-to-month cash flow, well, go pay cash for it, But you just never want to dwindle your cash down to a position where you need to come borrow money to make ends meet, So, but I would say just visit with your loan officer and let them help you decide, help you look at it, because that's what we do,
So you mentioned kind of going to your banker. How important is a relationship between a business owner and their banker, and how can someone build a strong banking relationship?
I think it's incredibly important. I think you need to feel comfortable with the person that you're working with. Everybody's got different personalities. You might somebody say, oh, you got to go talk to Nick, and you come and talk to me, and man, I hit you between the eyes with things because I'm pretty much a deep personality, and I tell it like it is, and that's not, you don't feel comfortable with that. Well, you might find somebody who you're more comfortable with that can sugarcoat it and tell you the same thing but in a nicer way. But yeah, you need to feel comfortable with them. You need to have an open communication. Big thing is, when bankers ask for your profit and loss in your balance sheet, and you think, oh, this is so painful. Why do they ask for this every quarter or every 6 months or every year? I got to prepare this, and send it in. It's it's not just to check a box on our end. It's so that we can look and compare it to the years past, and there's a lot of information that we can convey back to you about your gross profit margins dropping, is, or your expenses, cost of goods sold going up, then you might need to raise that, what you're selling your product for. Or your operational expenses are way too high compared to the last couple of years. Are you hiring people? Do you have too many people working for you? We can review all that, and we should review all that, because we want to make sure you succeed and keep paying your loan on time. And sometimes it takes somebody telling, the borrower that, man, you need to cut staff. Your payroll's way too heavy and you're going backwards. And they already know that a lot of times. They're like, I know I need to cut staff, but this is my family, but it's not your family. It's a business. And you as the owner have to make that hard decision sometimes. And it's not a comfortable, it might take you a week, it might take you a month to finally get the courage up to go in there and let somebody go, but sometimes it's got to take place. And sometimes the banker's the guy that might look at you and tell you, you need to get rid of somebody. Anyway, I went on too long.
As far as relationships with your bankers, just proactive communication. Keep that communication open. A lot of times we'll see, and even on deposit side and loan side, because I hear all that over there, but we can't help you if you don't talk to us. And having that proactive communication, letting us know what's going on, where you're at in a process, that really helps us keep things on track. And just the transparency. People will sometimes just neglect to tell you certain things about what's going on. Oh, I had a bad month, I'm a little behind. They hide things. Be transparent. If we are working on a deal and then all of a sudden we find something out, it can totally kill something, totally kill a deal. So just being transparent. Also, be consistent, keep up with us. Let us know what's going on. And then just build your rapport. If you're going to do something, or if you say you're going to do something, make sure you follow through. Be like, hey, I know I'm behind. I'm going to make a payment on Friday. Great. Just stay consistent and be truthful. Follow through with what you say you're going to do. But communication, if you stop talking to us, we can't help you. And that's one thing that we see quite a bit. So communication.
Yeah, so I think the why has been touched on. Nick and Nancy both did a really good job on that. So I want to just briefly touch on how, right? Because it can be a little intimidating to walk into a bank. It's interesting. I work there, so I walk in every day. But if I ever walk into another bank, it's immediately like, I don't know, just a really weird feeling, right? Everybody's got a kind of a weird feeling walking into the bank. I would so much rather sit down and talk with you guys about the problems you're having or your business plan or what you're thinking, what you're doing. Than to look at my computer and, go over a report or review this statement or that statement or whatever. I would hope that Nick can attest to this as well, is I would love nothing more than to sit down with you and talk through your business, your problems, what you're thinking, what you're planning. Heck, I'll come visit you at your business. I'd love to know, what you do. You show me around, talk me through how you got started. Why'd you start doing this? We want to have a relationship with you guys, as much as you may want to have a relationship with us. And it really does help a ton on our end. I can't tell you guys how often I've been in rooms where, there's a decision being made about, do we want to loan this guy this money or not? And the lender is able to say, hey, I know John. I've worked with John for 5 years and I know his family and his kids go to school in town and da-da-da-da-da. And that matters a lot in community banks. It may not be the same discussion that happens at Bank of America and Chase and those places. I don't know. But in a community bank, that's a really, really big deal. And the opposite is also a big deal, where it's kind of, I know John, but I met him through another guy, and this is the first thing that we've really looked at, and I don't have a great grasp on what he does and who he is and his family and any of this stuff. And it's like, oh, do we really want to lend John this money, if it's a tight thing? So the how, we want to be your friend as much as certainly way more than we want to be doing basically anything else it is that's part of our day to day. So don't be afraid of us.
You mentioned before in the previous question interest rates and inflation. So interest rates and inflation, economic conditions are always changing.
Yeah.
How should small business owners think about borrowing in today's environment?
Yeah, so this is a really, really interesting one. The ECB, the European Central Bank, actually just raised their interest rates this morning, and they're the first kind of large institution to do this as a response to the war or conflict in Iran and Israel. And so you'll likely see Canada follow, and then possibly the U.S. It's an interesting political thing now. But yeah, rates now seem high for some business owners. If you were in business in 2020, 2021, 2022, really that was a very strange time for a number of reasons, but chief among those is the cost to borrow money for you or for us. So to kind of pull back the curtain a little bit, one of the ways that banks can fund loans, right? Because in order for you to borrow $1 million, I've got to have $1 million for you to borrow. So one of the main way, or the main way really, is other customer deposits, right? But if I don't have customer deposits to loan you for whatever reason, I can borrow money from the federal banks. And that rate typically is about 3 to 3.5% cheaper for me to do than it is when I lend it to you. And that's basically my carrying costs and a little bit of profit to keep everybody employed and happy. Right now, in the last probably 3 years since then, rates went from basically 0 to about 3.5%, which is where they are today. So for you guys, that equates to about 3% up to 6.5%, right? Which is a real shock, especially on about a 5-year time frame, which is where rates will adjust on a lot of business loans. So, the loan that you got 5 years ago was at 3% and your payment was this. Well, 5 years later, it adjusts up to 6 or 7 or 8 or whatever it may be today, and payment doubles. And it's like, I can't afford that. And, it kind of is what it is on our end. But at the same time, if you don't have an option, we also kind of don't really have a whole lot of option. And that's where, coming in and talking to us is of great benefit. If you don't communicate to us, all these things are automated. And it's nothing to say, we don't want to pay attention to it or we don't want to be involved in it, but it's just something that happens. And so if you don't reach out to us and say, hey, I've got this problem with the loan adjustment, I can't know that until it's already a problem. And so, yeah, I don't really know how much that answers the question of kind of borrowing now. It's kind of the same as it ever was. Maybe it's a little bit more cash heavy than it would have been a few years ago just because the cost to borrow is a bit higher. But it's kind of, always going to be that same mindset of if you can reasonably do it in cash, you almost always should. Unless you've got a large project coming up that you're like, hey, I'm stocking away money so that I can borrow, for a second building or a second piece of equipment or whatever your large purchase is.
So as far as interest rates and everything, kind of like he was mentioning, just the interest rates, making sure that when the payment doubles and everything, just make sure that you can keep an eye on that and that you can take care of that payment and so forth. Also, just keep in mind of what you have access to pledge for a loan, knowing your cash flow and what cash you have on hand. Just keeping those in mind, and if something does arise, what you have available.
I guess a lot of it was already covered, but I'll speak to one sector of the industry out there, and that's the commercial lending to apartment complexes, stuff like that. The stuff that we've seen with the rates going up so much. This is just a bit of information I learned not too long ago, but there's close to $1 trillion in the Metroplex right now that was lent out to people building apartment complexes, big rental, complexes, and it was all based on rates of 3.5% to 4%. And so when the rates went from 3.5% to 4% to 7.5%, when the rate adjusted on these guys. Most of them were fixed for 4 to 5 years. All of those that were fixed for 4 to 5 years are about to start adjusting to the new rate. And so we've got $1 trillion worth of apartments. And I know in Waxahachie, we had apartments going up everywhere, big apartment complexes all over the place. And, you know, you rent those things up, and let's say you borrow the money and your payment's, you know, $30,000 a month on that apartment complex, and the rates go to 7.5, and now you're paying $40,000 a month. Well, that might have been what your rent was, you know, $40,000 a month, and now your payment's $40,000 a month. So there's a squeeze going on. A lot of the banks are having to work with these people because we don't want apartment complexes back. We really want those people that borrowed the money to continue to make the payments. But we really do need a softening of the rates right now. Otherwise, there's going to be some major foreclosures. You know, when a banker looks at one of those, say we're running the numbers on an apartment complex and the numbers are $30,000 a month and the rents are going to be $40,000 a month, we think we're in good shape, right? Well, we also do a sensitivity analysis where we raise that rate a little bit. You know, what if it's 0.5% more or 1% or even 2% more? Can they still make that payment? But most banks didn't think it was going to go 3.5% more. You know, the rates went up so quickly that even the apartment owners can't raise the rents fast enough because there was so many of them put on the ground that there's all this competition for tenants that it's a mess out there right now. And it could blow up. Hopefully the rates soften. Hopefully the banks can, you know, keep those borrowers happy and hold the rates down a little bit. But you can't, as a bank, you can't go upside down. You know, we're not going to lose money each month to try to keep your rate down. If we're having to pay more, eventually you're going to have to pay more. And there was a squeeze on the banks for a period of time because the rates went up so fast that we lent this money at, you know, 4.5, and now it's costing us 3.5, and that's not enough margin there to carry the bank. So we were waiting on these rates to start adjusting, but now they're starting to adjust, and we could see some repercussions in the market on these big apartment complexes everywhere. So if you're out there looking and you see all this competitive, you know, come rent with us, it's because they need those things at 100% right now to carry their notes. So anyway, might be good for the consumer if you're looking to rent something.
What are some warning signs that a business may be headed for financial trouble, and what should owners do when they see those signs?
Again, as I said earlier, you really need to be running accounting software of some sort, and at least every month you need to be looking at your profit and loss statement and figuring out, hey, did we make money? Is our profit margin still there? Are we, you know, or making the money that we made the last month? You know, why are sales up and down? You need to be watching all that. But if your accounts receivable starts moving out, you know, in other words, you sell a product and you're typically paid in 30 days, and you know, some people pay in 60, but if that 60-day past due starts getting larger and larger and larger, and then it jumps to 90 days, that's definitely an indicator that you need to get on the phone and start collecting your debts. You know, if that gross profit margin starts narrowing, if you look and you think, man, we're making 30% on our product, and you know, I guess the cost of this and this went up, and now our gross profit margin's only 20%. Well, that's a big indicator. That's why you want to look at those profit and losses. If the sales start slowing down, you know, we're used to selling, you know, $10,000 a month, and now we only did $6,000. You know, that's one of those indicators too that, you know, you could be in trouble, or it could just be a little slowdown. You know, if you can look and say, hey, but we got all this on the board for next month, we'll bounce right back, then no big deal. But you need to be watching that monthly.
I agree with Nick as well. I mean, just referring to that profit loss statements, and keeping track of, you know, what's going on, knowing where you're at. Don't go too long without looking at that and just keeping track. But also, are you having difficulty making payments? Are you starting to fall behind? That's going to be another kind of warning sign. And not just payments. What about your account balance? Are you spending too much? All goes back to where's your funding going? Where is it going? Just looking at your finances and staying in the know. That's going to be your best bet, is just to keep track of that, know where your expenses are. And that would definitely help.
Yeah, I think Nick kind of nailed this one and even alluded to it a little bit earlier. Is just, one of the big things that we do on our side is comparison. Whether it's year over year, quarter over quarter, month over month, you really kind of have to do these things. And the biggest thing that I personally do with that, I think most people will tend to do, is just line by line, what was revenues? Okay, good. What was cost of goods sold? Okay, good. What was gross profit and gross profit margin, right? Once margins start to shrink, then you realize, okay, I'm paying a little bit more. I knew that I was paying a little bit more. I didn't know it was this much, right? And I can absorb 3%. I can maybe absorb 5%. But once it gets to 7%, then I've got to start raising prices, or I can't make ends meet. And so just being mindful of those things certainly is key.
Kind of shifting gears a bit more to tools. How has technology changed the way that small businesses manage their finances, and what tools or practices do you think are worth adopting?
Yeah, so the AI is the big thing, obviously, that is kind of the hot button topic for everyone. But you don't really have to go there immediately, right? There are steps in between. And not only that, but if AI intimidates you like it intimidates everyone and nobody seems to want to admit it, that's fine. It's normal. Go talk to Amy, talk to one of us. We can work through, how to kind of start to utilize that. And it's not, hey, we're doing everything all the time on AI. I'm using it for this thing. I'm using it to help me write an email. I'm using it to compare, hey, here's my profit and loss from last quarter and this quarter. You tell me what you see, Copilot or whatever, thing that you guys use. Even simpler than that is just using an accounting software of some kind, whether it's QuickBooks or, God's honest truth, I don't know what other ones exist, but QuickBooks is the one that everybody talks about all the time and nobody seems to like, but it just kind of is ubiquitously used. But, just utilizing some of those things to kind of gain some insights that you may not necessarily have if you don't come from a financial background. If you're a plumber and you say, hey, I'm pretty good at this plumbing thing, I might be able to run my own business. You're a plumber at heart. You're not necessarily a business owner. And that's not a bad thing. In a lot of cases, it's a good thing. But there's things that you don't know. Just like the guy who is a business owner who owns a plumbing company, he doesn't really know plumbing. I mean, there's always going to be gaps in knowledge, and that's normal and it's okay and it should happen. But utilizing, technology, whether it's AI or just, simple, business accounting that can give you insights, really helps to kind of cover those gaps.
I would have to agree. Definitely. I have written down here bookkeeping programs, QuickBooks, and there's others out there. And they can do a world for you. Just knowing how to utilize them, what they have available, not just, keeping track of your expenses, but does it build a balance sheet for you? Can it help you with your profit loss? Just creating those reports so you can see it. Also, just mobile banking. There's so many different tools available just within the banks, being able to export your expenses and have it automatically do it every day, every week, every month. But then also you have like your treasury services within banking, how are you going to bill your customers? Having that accessible, you can say, hey, here's a link. Let's pay through there instead of them waiting, mailing a check. You can sometimes get those funds from them sooner than later, and that will help your cash flow. But just knowing and asking questions, what is available? What does this program do for me? And every company is different. So you might utilize it differently than your neighbor next to you. But knowing what's available and how it works is key.
I think they covered most of this, but just hopping back on the whole QuickBooks. Right now, you can get QuickBooks online. I think it costs like $29 a month. If you're running a business and can't afford $29 a month, you really don't need to be running a business. And if you've got a CPA that's doing your taxes and you think, I don't know how to run QuickBooks, get with your CPA, let them give you a little, they can set the QuickBooks up, show you how to put in who you're writing the check to, that's your expense, show you how to put a deposit in, that's your income. It's that simple. And they can probably teach you how to run QuickBooks in a couple hours, even if you don't know anything about it. And teach you how to print those reports, because once you've got all that stuff in there and you balance your checkbook at the end of the month, you can print your report and see what kind of money you made. But as far as the AI goes, gosh, y'all, the younger generation, it scares me to death. I'm not gonna lie. I met with a group of CPAs the other day, and that conversation came up, and they said they cut their staff in half. And the half that got cut, it was the new guys coming out of college. So you go get a CPA, you become a CPA and can't find a job because you can't get your foot in the ground to get started. And it scares me. It scares me on the finance side, because eventually somebody can just put their information in a computer, and do they really need us? My son, we own a mortgage company. Well, it's already gotten so simple on the mortgage side where it's him and one other guy, he communicates some, but when's it going to be where I need to buy this house? Well, click here and everything's done internally, and here's your approval, send this, send that. So, blue collar, if you're a plumber, if you're an electrician, if you're a roofer, man, y'all, I'm telling you, that might be where the money is here soon. But it scares me. So the technology, I know I got off on that, and that wasn't really the question, but when I met with those CPAs, and I asked her because they were coming to us for a loan to buy out the senior partners. And when they told me that, I said, so who are y'all going to sell to when the time comes? If you don't have junior people coming up under you like you were when you got out of college, you know what their answer was? We'll cross that bridge when we get there. Right now, we don't need them. And she told me, it used to be you'd send that junior person, if you had to respond to the IRS for one of your customers or clients, you had to prepare a letter and do all this research. And she said it used to take them a day to prepare that letter. And she said, I can, in like 10 minutes on AI, I can type all that stuff in, click a button, and I've got the letter. She's like, why would I pay somebody, $50,000 or $60,000 a year to come in and do something when I don't need it? And I get that, but at the same time, who's going to buy that company? And where's it all going? So anyway, got way off again. I'm sorry.
What can business owners do today to improve their chances of securing financing in the future?
Make sure you pay your bills on time. Keep your credit. Keep up with your books. Don't try to grow too fast. And I know that's kind of a surprising answer, but that's one of the big downfalls I think of new companies is, you're a roofer, and let's say it's, hey, we got this opportunity to do this whole apartment complex. I got to get this deal. They go over there and get the deal, and they don't realize that group that they just signed this contract to do all these roofs for doesn't pay for 60 to 90 days, and they've got to buy all these materials, and they got to put it on, and then all of a sudden they find themselves in a crunch because they don't have the line of credit large enough to go carry that for 60 to 90 days waiting on their the invoice to get paid. So, but yeah, don't try to grow too fast, Realize that you have limitations. Keep your credit, keep your profit and loss. That's all I can think of.
I mean, I definitely agree with him as well. Just, making sure you don't grow too fast and don't make rash decisions. Think about what you're doing. Don't make a sudden change. You're in this industry and you're like, oh, I need to, kind of move along. Well, let's go do this little side venture. Do your research. But yeah, don't grow too fast. A lot of times we see that happen and you just can't make ends meet.
Yeah. Really for this, it's the biggest thing for me is almost always just going to be just not keeping up with your financials and not having a good idea of where you're actually at. There's really nothing worse, on our side. And it's interesting. We, do a better job than I could express or than you'd believe of trying to kind of protect you guys from yourselves a little bit. Just in terms of, there's somebody above me and there's somebody above him and there's probably a guy above him. And all along the way, we've all got to believe that you know what you're doing to some extent. And if you come to me and you can demonstrate to me pretty quickly that you don't really know what's going on with your business, I've got a real hard time going to the guy above me and saying, John knows what he's doing. He knows his books. He's got a good grasp on things. And so just understanding where you're at and that's, I just want to be clear, that's completely different. Coming in certain and wrong is different from uncertain and wrong, right? If you come in and you ask me a question, hey, I'm looking at this and I can't make sense of it. That's one thing. But if you come in and say, hey, I'm making money and I'm doing just as well as I did last year and maybe even better, it doesn't take me but 2-3 minutes to look at, your P&L and your balance sheet to be able to say you either do know or you don't know. And when you don't know, that's when it really gets difficult for everybody, certainly. So not knowing your stuff.
Before I give the panel, I'm going to give the panel a chance to tell us a little about their individual banks and just a quick pitch on their banks, where they're located, those types of things. I just want to open up to the floor. Does anybody have a question for the panel that hasn't been answered that they'd like to ask?
I have a question. So how does a individual's debt to income ratio affect them starting a business?
Yeah, so DTI isn't something that we deal with a whole lot on the commercial side super specifically. It's more of a mortgage figure. Typically what we'll do is, and it really kind of depends on the scope of the project, is a full kind of global cash flow, right? Your personal income, whether you've got a business on the side and you're gainfully employed, your partner's employed, whatever your personal stuff is as far as income goes, your business income, and then whatever debts you have. So, it's more of a global picture of how much are you making, how much are you spending, and what's left at the end of the month. I mean, it's kind of the same thing as DTI, but it's just used a little bit differently, and we include some things that aren't typically included in DTI.
Can I adjust that question just slightly? Is there, how much money does a business have to have before they don't personally have to guarantee the loan?
Super depends. With Pinnacle, it's never. Pinnacle will not do a loan without a personal guarantee. And the idea behind that is, and not to get too backgroundy, but the idea with that is always just that if you're not willing to put your name on it, I'm not willing to put my name on it. And I don't know. I mean, that I think is a pretty prevailing sentiment with community banks. I think it maybe gets different at some point, and it certainly gets different when you talk about larger chain banks. But a personal guarantee pretty much never goes away. And that's just
Ford or a GM or somebody like that.
Yeah.
They don't personally guarantee their stuff.
Right.
But you got to be really big.
Yeah.
And commercial loans don't go on your personal credit.
Correct.
So you might think, well, this is going to go on my credit. I won't be able to buy a house. No, this is a business loan.
Correct.
You're guaranteeing it. Now, if you don't pay, it's going to end up on your credit.
Right.
Because you guaranteed it, but it's not going to affect you if you want to go out and buy a house or when you go to buy a car or something like that. It's not going to show up.
Did anybody else have a question? Yeah. We'll start with, give Scooter. Go ahead, Scooter.
Well, if I'm wanting to buy a business, which I've done in the past, but all I do is buy their business, like the customers, not the building and the equipment. I don't need any of it. I've done it in the past, but like that, and if you do, what would you need from me and from the person I'm looking at buying? Because it's pure business, you know.
That's probably an SBA loan, is what it sounds like. We've got a whole, we've got a whole SBA department, and that would most likely go through our SBA department. And if there's no hard assets, it's hard for a bank to, you know, I don't know if maybe y'all.
Yeah, the only thing that I've seen kind of other than that is if your existing business, you know, if you have some kind of asset that you can pledge to it, you know, what's being bought doesn't necessarily have to be what's being pledged. So if you own, you know, a building or some equipment, or you've got some inventory or really anything on your, you know, the asset side of your balance sheet, you know, that's not tied to something else, we can always look at and talk about, and we can get creative if we need to. You know, really what you're talking about here is what we consider a goodwill purchase, just because it's a catch-all term for there's value there, but I couldn't tell you exactly what it is, and I couldn't tell you exactly how to derive it, right? You know, as far as what we would need, you know, really, I mean, it'd be your financials, and then also, you know, a breakdown ideally of, you know, it depends on if you're buying all, you know, the entire, you know, customer base for the business you're buying. In that case, then we'd really want the financials for that business as well, because that gives us a good idea of, okay, you know, if this guy's pulling in this much on this customer base, I'd expect Scooter to be able to pull in roughly that much. You know, there's going to be some folks that go away just because, you know, they worked with Peter for years and years, and they loved working with Peter, and now they're going to try to do something else. But, you know, you should be able to retain most of them, I would think. But yeah, it just depends on if you've got any other assets. But kind of like Nick said, typically SBA on something like that is going to be a good deal for you.
Patrick?
I was gonna ask, a business line of credit, you don't usually need that until yesterday. So to apply for it and what have it, you wanna do that ahead of time.
Yes.
But what if you don't use it? Does it go away? Does it expire?
We've got customers that we've renewed that line year after year, and they might have used it once in the last 5 years, and it was on a big project, and they drew $100,000, and 30 days later they paid it off. You know.
Can you negotiate your terms, or is it, this is what it is for everybody across the board?
Yeah, no, it's definitely negotiable.
Yeah.
Commercial lending is absolutely negotiable.
Yeah,
You know, on the consumer side, it's a little more difficult.
Yeah.
Because there's laws and regulations in place there, but commercial, yeah.
And is it better to, is it also better to have one bank, or is it better to have multiple relationships so that you can figure that out?
Good question. Because I own businesses, I've owned businesses in the past, I would, as much as I wanna say you just need to deal with just one bank only, I think it's always a good idea to have some other bank, at least two, but I wouldn't, and don't record that.
The mic was over here. No, they won't pick it up.
Yeah, you're good.
But yeah, I think it's always a good idea because you never know. The bank that you got everything with, you know, there's a big mega bank right here in Ellis County that people are flooding away from right now, and that bank required you to have everything at their bank, and they changed and changed and changed, and now you can't walk in the bank and meet a loan officer because all the loan officers are in one spot behind a closed door, and there's a lot of people don't like that, and it's so painful when you've got everything there and you've got no other relationship. You know, where do you go? I'll tell you a really fun story is that the person who I kind of replaced here at First Financial was my banker for 25 years. And I just looked at a project, I do some commercial purchases and stuff on the side and flip them and roll out in and out of them. And I saw something the other day and I thought this has got potential. And then I started thinking, who do I go to? I've gone to Alicia my whole life. She's always giving me the loan. And you can't really, you know, when you work for the bank, it's really difficult to go try to borrow money from the bank you work for. They're actually harder on us than they are on the regular customers. So I ended up not pursuing it over that. So if I'd had a second relationship, which I should have, I'd have somebody else to go to.
If I could ask is, when you are looking at an SBA loan versus a community
SBA gives the local bank a guarantee, and that's why, like the loan's still made through the local bank, but the SBA is guaranteeing a portion of it against default. And so it allows you to get a little better interest rate a lot of times. You can stretch terms out a little longer because of the SBA guarantee. Sometimes you don't have to put as much money down because of the SBA guarantee. So it is painful to go through the SBA. Anyone who's done it knows that. But there is some benefit to it, and a lot of times you wouldn't get the loan if you didn't go through the SBA.
And for the sake of time, I do want to give our bankers an opportunity to, our panel an opportunity to tell us a little bit about their business. So if you could just tell us a little bit about your bank, just a brief pitch, and then if you could leave everybody with one piece of advice to walk away here with, that would be great. So I'm going to pick on Jalen and start with him, and we'll go down the line.
Yeah, so I work for Pinnacle Bank here in town. We're located in the Kroger Shopping Center right off of 287. And we are a multi-state bank. We're the largest family-owned bank in America. There is a guy at the top, and it's all his money. And that defines my day-to-day, unfortunately or fortunately, depending on the project. We're in, I think, 11 states now. We've got 27 locations here in Texas, primarily DFW. We do have 6 or 7, I think, down in the San Antonio, San Marcos area that were somewhat recently acquired. And we don't suffer with as much turnover as other banks, on the super, front side of everything on our tellers and that staff. But it's something that, I think Nick can attest, and certainly Nancy can attest, that is something that everybody deals with a little bit. But we really take a lot of pride in problem solving for you guys. And a big part of that is, my card's got my cell phone number on it, and my email's got my cell phone number on it, because, if you need something that's bad enough to call or text me on, then it's something that I want to get solved too. So, it's just something that we take a lot of pride in, is being available to you guys and trying to problem solve. Advice is, don't be scared of us. Don't be scared of the bank. Everybody in there is happy to see you. Not a whole lot of people come into the bank these days, so it makes for a nice break in our day-to-day to talk with you and help you guys with whatever you're needing.
All right, well, my name is Natalie. I am with InterBank. We are on Midlothian Parkway in 287. If you know where the Baylor Family Clinic is, we're right there next door. But we are in Texas and Oklahoma. There are just over 40 branches between the two states. We used to be Vintage Bank, and we were acquired by InterBank, but they have definitely let us still have that community feel. We love seeing people come in and talk to us. Don't be afraid, just like he said. We love getting to know y'all, know your business, know your families. And I mean, we just pride ourselves on just being involved and getting to know our customers.
Hi, y'all. I'm Nick with First Financial Bank. Only been there 8 weeks, but I did go through a mandatory NEO program, which is the new employee orientation, for a week out in Abilene. First Financial is, we've got 90 branches in Texas. We're only in Texas, based out of Abilene. About a $15 billion bank. We have been rated one of the top 7 banks in the country. Some big investors invest in our bank because we are a very well-run bank. A lot of people are surprised that guys out of Abilene can run a bank like this. It is kind of original in that there are multiple regions, and each region has its own board of directors. And so our board of directors in our region is the Chisholm Trail region. There's eight banks in our region. Our board of directors are all local guys. One of them's an ex-insurance owner, Jack Scott, who was in insurance forever. So in the local region, we can loan up to $4 million with local decisions. And then once it gets above $4 million, it goes out to the higher higher ups, I guess you could say. But it is kind of original the way the bank's run. I'm located in the branch over on Northgate, which is at Northgate and 77 across from the HEB and Walmart area. And then we've got the location here in Midlothian at the corner of Midlothian, or I guess that's, what is that, Midlothian Parkway and Main Street. There's some good guys in there too. One of them's out right now, but I got him covered. But yeah, we love visiting with people, love looking at stuff, talking things through. So if you've ever got anything we can help you with, we'd love to do it.
All right. Well, first off, round of applause for our panel today. Thank you guys so much for coming and sharing all of that with us. Before we get out, the only thing that I really want to put on everybody's mind, there's a couple of things happening this weekend in the city. There's a World Soccer Festival and Watch Party tomorrow night at Midlothian Community Park on the baseball side. Soccer's coming. World Cup starts today at 1 o'clock? 2 o'clock. So get involved. There's going to be a lot of money coming to the DFW area over the next month and a half. So don't miss out on all the different opportunities to get involved and just jump on that soccer hype train. Then next Thursday from 5 to 7 at Tequila Cochino, we will have Connecting with Cocktails, which is a networking event that we do. So keep an eye on our calendar. We will have another July Business for Business on the first Thursday of the month. I think that's July 6th. First Thursday of the month, there's going to be another Business for Business. So check our calendar on our brand new website if you haven't gone to look at it, and that should give you all that information. Thank you all for coming. I hope everybody enjoyed it, and we'll see you next time.